Hi class. In this video, I wanted to take a quick look at the practice set and kind of give you some instructions on completing the practice set. So I actually have it pulled up in duplicate here just so we could see both things at once. But let's look at this. It says we've got some instructions, 10 tasks to complete, and we've got some company information. It says Doodles provides printing services to customers. They began operations on January the 1st, 2018, and then in January 2019 they realized the current VP had not created the records in an accounting system, and due to a time issue, the financial information must be recorded by hand to produce GAAP-based financials. So essentially you're doing all of 2018's record keeping at the end of the year. So lucky you get to do that. Some things that you will have to know: they use straight line depreciation. They use the allowance method to account for uncollectible accounts, and they use the calendar year, so we're going January to December. They've got 2 employees. We've got some payroll information here, and looks like these are our transactions. So I'm going to do this. Oh, and we've got a chart of accounts. And then we've got some forms. So the instructions say prepare journal entries to record external transactions. So that's these. So just so we can see them together, here's our journal entry, or our general journal. And you can do this. You could print this off and do it by hand if it makes more sense, or it's easier for you to write it in by hand. When you get finished with the project, you're then going to go back into Blackboard and answer questions about the project, so that's how it's going to be graded. So if you want to use pencil and paper, you can do it that way. If you would prefer to do this in Excel, you can do it that way. Doesn't matter to me as long as you do it some way and then answer the questions. So just because this is how it's built, I'm going to do it just a couple in here. So we've got January the 1st, and I would put a date just so you can kind of keep track of what you've done. So the owner invested $70,000 in the company in exchange for 5,000 shares of no par common stock. All right, so the company received cash of $70,000. The owner received, well, the investor received common stock, oops, not capital, common stock in exchange for that $70,000. Now, since there is no par value, then we're going to record the common stock as it was exchanged, or the amount that it's exchanged for. There can't be any additional paid in capital in excess of par because there's not a par. So common stock will be $70,000. So that's entry 1. Entry 2, still January the 1st, it says purchased a computer system for $32,000. And you know, I probably should look and see what the account is. Equipment-computer. I called it a computer equipment, but probably should call it what they're calling it, because when you answer your questions, you want to make sure that you're talking about the same account. So equipment computer, and looks like they paid. It doesn't say, we're going to assume they paid cash for it. All right, so just a couple of things. You should have at least 1 debit and 1 credit in each entry. Debits and credits always have to balance, so you can kind of eyeball your entries and make sure you're in balance. Some of the entries may have multiple lines, but whether they have 2 lines or 10 lines or 100 lines, debits and credits always have to balance. I skipped a line between my entries just so I could see them easier. You don't need to write out an explanation, although in real life you probably would, but you don't need to do that for the purposes of this project. So, but I would skip a line. If you need to add more lines, you can do that. But skipping a line just makes it easier when you go back to post. So you're going to go through each of these journal entries like that, putting in those amounts according and using these account names to do those. And once you get that done, that would be your step 1. It says post journal entries to general ledger T accounts. So once you get step 1 done, you're going to go step 2. And I would start at the top of the journal and work my way down. So again, it may help you to print this off so that you can then see it and post it rather than scrolling up and down. I guess I'll just scroll up and down. Cash is a $70,000 debit, so when we get ready to post that, we're going to find our T account somewhere. Here's our cash T account, had a $70,000 debit. You don't necessarily have to put the date, but you could if it helps you to keep up with it, just to make sure you did them all. And then we had common stock, $70,000 credit. And that was on January the 1st. Oops. All right. So it wouldn't be a bad idea to put the date just because if you miss one, you have to go back. You can find easily find what you missed. So that's the process you're going to do once you do the journal entries. Start at the top of what you did and just work your way down. Debits get debited in the T account that's listed over here. Credits get credited. Work your way down. So that's step 2, and then it says prepare journal entries to record adjusting entries. All right. Just making sure I don't see any other. So these are the regular transactions. The adjusting entries, I don't think they gave us any additional entries. Oh, here they are. So our adjusting entries, it says, stated below, was gathered by the accountant. This is where you need some of the information that was given at the top, like they use straight line depreciation. And I talked about how they record uncollectibles. So you're going to make the adjusting entries. These are going to work much the same way as this. You're going to record the entries. Here's your journal. So put your date, put your account names, debits, and credits. And you'll do the adjusting entries required here in this area. And then when you get those posted, I believe it said to go back and post them in the T account. So yeah, see the scrolling is kind of difficult. So that was step 3. Step 4 says post the adjusting entries in the general ledger T accounts. And those are the same. Let's go over here. Those are the same T accounts that you would be working with already. So you should already have stuff posted on a lot of these. And you may actually have to use some of the information in the T accounts to calculate your balances for your adjusting entries. Once you post all those to the T accounts, you're going to do your balances. And remember to find a balance in a T account. The easiest way I can explain it is add one side, add the other side, take the difference. The difference goes on the big side. So for cash, we only have one amount, so the balance would be at this point $70,000, and that balance has to go on the big side, which is only side with anything. If we had a $30,000 credit, we would add one side, which is $70,000. The other side would total to $30,000. Take the difference, that's $40,000, and the balance goes on the big side, which would be over here. So add both sides, take the difference, balance goes on the big side. Prepare an adjusted trial balance. So to do that adjusted trial balance, you're going to list all of your accounts and those account balances. So our adjusted trial balance is right here. You've got your form. So they've given you a leg up. You've got the account name, so you need just to put whether it's a debit or a credit and how much the balance is, either a debit or a credit. So these amounts are going to come off those T accounts. And you can't do this until you do the adjustments because it is an adjusted trial balance. Once you get this done, you should total up the debits, total up the credits, and it's a trial balance, so it should be in balance. So your total debits should equal your total credits. Prepare using good form an income statement, a statement of stockholders' equity, and a classified balance sheet. So you can use your account balances here in your adjusted trial balance to do those. I always like to look through here and find my revenue. So right here, service revenue is the revenue. So if you can find your revenue, then your revenue and expenses, those are all income statement accounts. Just above that area, you'll see stuff that goes on your statement of stockholders' equity, and then right above that are your balance sheet accounts. Now remember, there are things that carry over from one financial statement to another. So the net income from your income statement will carry over to your statement of stockholders' equity, and then your total stockholders' equity is going to carry over to your balance sheet. So they link together. If you can't remember how to do those, and even if you think you can remember how to do those, I would still suggest looking in the book, find a good example of an income statement, a statement of owner's equity, and a balance sheet, and use those to format your financial statements. The other thing I would say is that use this. Make sure you put all the accounts somewhere. If you don't put them somewhere, you have missed something. So all of these accounts should be listed somewhere on those 3 financial statements. And they've got the format for you, so it shouldn't be too difficult. And once you do those, you're going to do your closing entries, and here's your journal entry to do your closing entries. So remember, you're going to close out your revenues, you're going to close out your expenses, you're going to close out your dividends. And you should be able to find examples of those closing entries in the chapter that covered closing entries, so follow that pattern. Once you close out your accounts, you should have 0 balances in all your revenue accounts, which I think there's just one in this problem, and in all of your expense accounts and in the dividends account. And then it says post the closing entries to the T accounts. So those T accounts are the ones we had way up here. So you're just going to continue with those. So you should have had amounts in these and balances in these. Once you close, post the closing entries to those, and what you should find is that all this stuff down here should end up with a 0 balance. From dividends all the way down, you'll see some changes in your retained earnings because of those closing entries. And then once you do those closing entries, you post those, prepare a post-closing trial balance. So the post-closing trial balance is the balance of all of the accounts that still have balances. So that should be all your assets, all your liabilities, and your equity accounts. So all the way through retained earnings. Dividends, revenues, and expenses should all be 0, so they don't need to go on the post-closing trial balance. Which, sorry for the scrolling, but it's way down here. Here it is. So the post-closing trial balance, and they didn't even list the revenues or expenses on there, so these should be the ones you need. So again, it's a trial balance, so your total debits should equal your total credits. If it doesn't, if they're not equal, you've probably made a mistake somewhere. And then the final thing is to calculate some ratios, and you have the formulas here, so you just have to think about where would I find those things. So current assets and current liabilities, where would I find that information? That would be on the balance sheet. So go to your balance sheet, find those amounts, and do that calculation. Cash, short-term investments, and receivables, and current liabilities, those things are all found on the balance sheet. Net income and net sales, found on the income statement. And liabilities and equity, found on the balance sheet. And so that will kind of give you an idea of how to do those. And once you get those things done, you're going to go into Blackboard and answer the questions based on the work that you did in the practice set. So hopefully this will give you at least a little bit more detailed instructions on how to tackle this. If you have any questions about that or you get stuck, I'm happy to help. And as always, if you have anything at all, any questions that you need, just send me an email, and I can take a look at what you've done and give you some feedback. Good luck.